and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries like every day. Today as well, we will be connecting with our experts in a short while from now. But before that, let's have a look at what the markets are up to. So Cheryl, a sharp fall from the day's highest point is what we have seen for the benchmark indices, as well as even the broader markets are not supportive that much today.
In fact, broader markets have not been supported since the word go, actually, Shrishti. A very good morning to you. Not a great morning coming in for the markets. Like Shrishti said, yes, we have given up all of those gains. The broader market is now trying to make some sort of a comeback. But yes, the benchmark indices, the fall has only accelerated when you talk about the benchmark indices, with the Nifty falling in excess about 160 points from the day's highest point. We did start in the positive territory, pretty firm start for the benchmark index. If you look at the India VIX today, it's seen a spike of about 4% or so. It's trading above the levels of about 17. Remember that it had hit a 52-week high as well. So that is your India VIX for you, which means the volatility continues. Nifty Bank giving all of its gains. It's now trading lower by about 1% or so. So yes, not a great picture coming in for the markets, with the advanced decline ratio also tilted in the favor of the losers as of now. It's the FMCG pack that has been holding pretty strong. So if you look at the top 5 gainers on the Nifty, they all are from the FMCG pack. So you have HUL, top gainer on the Nifty, seeing an uptick of about 5%. You have Britannia, Nestle, ITC, Tata Consumer that are seeing good gains. Add to the list as well. Apart from the Nifty companies, you have also Marico, Godrej Consumers, all of them doing well. And one of the reasons why is that the commentary coming in from these FMCG majors with regards to the rural market is pretty comforting, and that's one of the reasons why these stocks are seeing an uptick. While on the flip side, you have Power Grid, JSW Steel, Bajaj Auto, Cipla, as well as HCL Tech that are taking a bit easy. And the sectoral indices front, no points of guessing the fact that FMCG index is the top sectoral gainer, followed by, that's the only sectoral indices that's with the positive gain. Apart from that, rest all of them are in the negative territory, with the PSU Bank index taking a sharper knock. That's the way how the markets are looking like, Shrishti.
All right, so it's just the FMCG pack that is holding on tight. But apart from that, a fall that we are witnessing on the benchmark indices as well as the broader markets. But with this, viewers, let's move on. And today, let's start first taking all your stock-related queries, since in a short while from now, we will be connecting with the management of Indian Bank as well onto the earnings. But on the query side, you can connect with us live on the WhatsApp number that is on your screen and will be flashing on the top of your screen as well. And you can also write to us on our social media pages, that is X as well as Facebook pages. So let's get started, viewers. And before that, let me welcome on board two of our very special guests today to help you on your stock-related queries. Kush Bohra is joining us on the technical side as well as on the fundamental side. Rajesh Agarwal, who is the head of research at AUM Capital, is here to help us with your queries then. Very good morning to both of you, and let me take the first query that is coming in from Subramaniam from Bangalore. And Rajesh, this one is on Supreme Petro. He's holding 1,000 shares at a price of 705 rupees. His query is that, is their expansion complete now, and are their units fully functional? I'm not sure, since I don't track this sector closely. But what is the potential of Supreme Petro in the times ahead? And as an investor, what should be his strategy?
Good morning, Cheryl. Good morning, Shrishti. Good morning, Kush. As far as Supreme Petro is concerned, the capex is almost done, although the commercial production at full scale would take some time to happen. And the numbers that were reported in the last few quarters have already, all the positives, I think, has been discounted in the price. It will be better to try to exit on any upticks, maybe around 690, 700 odd.
All right, let me take the next query. It's coming from Shashidhar Reddy. He's writing to us from Hyderabad. He has GAIL 186 is the buy price, as well as Tata Power. The 402 is the buy price. Kush, what should he do? Hold or exit? And also, firstly, good morning to you, Kush, as well as Rajesh.
Good morning, Cheryl. Good morning to all. Both these stocks are, a very clear hold now. They have come in a bit of a profit booking mode yesterday and today also, with the market. So we are seeing a bit of a downturn, but I think, most of the, texture of these stocks is very much intact. If in fact, I'll be keen to buy on dips, at least for Tata Motors, even Gale to some extent, but Tata Motors for sure makes the buy on dips cut. So be a little watchful. If you are looking for support zones, then 430 is a very strong support zone for Tata Power, and as far as Gale goes, 189 is a strong support zone. So if these are trading bets, and if these levels are broken, then you're better off exiting. But on the whole, if the view is anywhere from 6 to 12 months, I think you should continue holding on to these. This is just around of profit booking, in line with market. The broader texture for both these stocks is very much up and intact.
All right, moving on then, and Kush, once again coming to you, this query is on Voltas. This one is coming from Raju from Kolkata. He's holding 80 shares from a price of 800 rupees a piece. Should he go ahead and book his profits in Voltas right now? The results are also due for Voltas, but the stock is very close to its all-time high levels. What's your take on this counter?
Srishti, my suggestion would be to book here partially. The stock had reached overheated territories, and we are seeing some sort of cooling. But if you see, the volumes are thinning, even on the way up, in the last few segments, last few sessions, the volumes were thinning. So perhaps there is a possibility that this fall could take the stock slightly lower, in fact perhaps to 1375 levels also. So my suggestion would be to book partially and hold the rest with a trailing stop loss of 1375.
This one is coming from Rima, who's writing to us from Pune. 380 shares of DCB Bank at a price of 134 rupees per share. Rajesh, she wants to know if this is a good long-term bet, or should she look to move to another counter. She's been holding it for the last couple of months, and the stock is just now, actually, if you see as we speak, has actually lost her buy price.
See, I don't think it's a good bet for a long-term horizon because there are various other opportunities available in the market, especially in the private sector banking space. For example, if I have to say, Kotak is trading at a historical low valuation of around 1.6 times price to book of FY26. That's a very attractive price for a long-term investor, I would say. Yes, there are concerns about RBI and all, but Kotak is a good buy. HDFC is a good buy. DCB Bank, although numbers have been good in the last few quarters, but I don't think that can match the qualities of HDFC or Kotak Bank. I would say switch from DCB to Kotak, either Kotak or HDFC Bank.
All right, moving on to the next query. And Rajesh, coming to you for this one. This one is from Vikram from Pune, and his query is for the long term, and he is looking out for a couple of stocks from the tourism industry where he can go ahead and start the investment in an SIP mode, maybe for the next 2 to 3 years. So any of your top bets from the tourism sector?
See, tourism has been booming like anything. Post-COVID, I would say everybody is like moving to travel, and you see a lot of crowd on airports and other places. So I think hotel industry is going to do well, despite the fact that almost all of them have run up quite a lot after COVID. But still, I would say one can go long on stocks like Indian Hotels or EIH Limited, which are a good bet for in the hotel industry, considering the fact that they have good property, they're going for expansion. Average room rent has gone up. Even the inventory is on the lower side considering the demand. So go long on Indian Hotels or EIH. Even on one can go long on either IRCTC or Indigo. But Indigo has run up quite a lot for Indigo. I would say wait for some correction to enter.
This one is coming from Raghavendra, who's writing to us from Chennai. He's bought Canara Bank at an average price of 350 rupees per share. He wants to know whether he should continue to hold on to the stock or book profits at current market price. What's your take coming in on this one, actually, Kush? Canara Bank in particular, sharp fall coming in for all of these PSU banking counters off late, and that is what the 3-month chart is also indicating, that this month has not been great for it. So what should our viewer do? Book our profits?
Well, by the buying price, it sounds like this is a long-term bet. But even then, my suggestion would be to book partially because, the kind of setups that we are seeing, suggesting that, the stock could head a little lower. Almost on an immediate basis, there is a possibility that the stock could head somewhere close to those 550 levels, and perhaps, a little lower than that as well. So if he does want to stay with the stock, he could exit now and re-enter, at those 550, perhaps slightly lower levels also. But at least for now, as you said, there is some sort of profit booking coming in. Plus, this setup was evident for the last about week or 10 days. So we are seeing that play out very clearly. So my suggestion: book some profits now. Look to re-enter, either for the same amount or the same number of shares, depending on your portfolio sizing and your position sizing strategy, close to 550 levels. That's how I would play a Canara Bank. On the whole, it looks good, but from the near-term perspective, there is pressure that could continue.
All right, so that's the take coming in on Can Bank. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and now we are joined by the management of Indian Bank. We have Mr. S.L. Jain, who's the MD and CEO at the bank, joining us right now to talk about the numbers gone by in the previous quarter. Very good morning to you, Mr. Jain. Thank you so much for joining us on ET Now. And first, let's talk about the provisions this quarter, as they were down both sequentially as well as on a year-on-year basis. Your NPAs have also improved. If you could tell us what led to such a good performance, is this a one-off, or are you confident that you will be able to sustain the momentum going ahead?
The provisions has come down because our NPA itself has come down. So NPA, which was 0.9 a year ago, is now a 0.43. And you see our slippages are coming down and recoveries are increasing. As a result, provisioning requirement has come down and therefore provision has come down.
Right. So just to follow up or add on to that, is there any stress that is building up in the book, specifically if you talk about the MSMEs?
So for stress, you have to see the SMA1 and SMA2. You see our SMA1 and SMA2 is coming down continuously quarter after quarter. It is 0.48%. And the collection efficiency has improved from 95% to 96%. So when SMA numbers are coming down, collection efficiency is improving, naturally your slippage will be come down, your stress level has come down. Little bit slippage has come down from the MSME book, which is basically in a micro segment.
All right. Have a very good morning, Mr. Jain. This is Shrishti also joining in. Now, despite the fact that the industry is facing pressure in terms of the cost of funds, you have managed to increase your NIMs for FY24 as well as for the quarter. Now, what is the expectations for FY25 now that the rate cuts are anticipated?
So you see the margin, we have given a guidance of 3.41 last year. With a plus minus 10 to 15 bps. So is against 3.41, we are ended with a 3.54. In the last quarter also, we were at a 3.44. So, and you see, we are living in a tight liquidity conditions. In a tight liquidity condition, what happens? Your cost of deposit will be high. And then some repricing impact will come, and in increasingly, it is very difficult to maintain CASA around 42%, 42%. Considering all these things, I'm of the hope that our NIM should be between 3.4 to 3.5 in a time to come, with of course with the 10 or 15 bips on both sides.
Right. Mr. Jain, although we've seen the CD ratio at comfortable levels, your CASA has also improved sequentially. Do you see any increase in competition in terms of deposits?
So competition intensity is there, sir. There is no doubt about it, right? But fact remains, your strength of your deposit franchise, energy of people, and you see the bank is continuously able to maintain 42% plus CASA in this tight environment. So the credit goes to entire by 42,000 people. The product we are having, the processes we are having, our endeavor will always be to have a CASA above 40%, and when you have a CASA above 40%, then your cost of deposit will also be under control. You see in the last quarter, our cost of deposit has increased by 2 bips, whereas the yield on advance has increased by 3 bips and the yield on investment has increased by 8 bips, improving better margins. So our all endeavor will be to protect our margins, control our cost, and to have a better yield.
All right. Also, Mr. Jain, on the RBI's draft guidelines of the project under implementation, do you think this will have any impact on your bank as well?
These are basically draft guidelines. The RBI has issued draft guidelines. We will examine these draft guidelines vis-a-vis our position. But as far as Indian Bank is concerned, sir, we are basically a retail bank. 62-63% our book is in retail, retail RAM, retail, agri, and MSME, and 37% is in corporate. And all entire corporate is not project finance, right? So it will have a lesser impact as against the others. But we are examining the guidelines, and then we will discuss this internally, and we will submit our comments to the RBI in this regard.
Right. It is believed that the credit cost for PSUs is likely to go up due to the move. What's your take on this?
Credit cost of PSU will go because of the project financing, the PSU banks are doing. But within the PSU also, we are a retail bank, sir. We are not having 50-50 corporate retail or a 55-45. We are 63-37 right now. So impact will always be there, but it will be less, and it will take time, sir. We'll submit our comments to the RBI for this provisioning aspect.
Also, coming back to the financials, Mr. Jain, the CET1 is at the healthy level. Now, deposits are at the healthy levels too. But do you think that you will need to raise capital in FY25?
So, you see, we have raised our capital of 4,000 crore in the last financial year. And we are having a capital adequacy of 16.44. This is a comfortable capital adequacy ratios.
All right, with this, Mr. Jain, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with more understanding on the quarter gone by numbers as well as the outlook for FY25. But with this, it's time to slip into a very short break yet again on Buy Now, Sell Now. Don't go anywhere. We'll be right back to take more of their stock-related queries. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock-related queries, and continuing the same with our experts for today, Kush Bohra as well as Rajesh Agarwal. And Rajesh, coming to you for the next query. This one is coming from Bharadwaj from Coimbatore. He wants to buy HCL Technologies for a long term, maybe for the next 2 to 5 years. Will that be a good idea?
Yes, one can go long because IT companies as such are trading at a very low valuation because of all the concerns about European and US markets. But one thing is very clear that going forward, once the rate cut starts cutting, discretionary spends are going to go up. BFSI is doing well. They are going into other verticals also. I think it's on valuation parameters. Yes, these levels are a decent level for a long-term investor.
This one is coming from Indu, and this one is for both of you, Kush as well as Rajesh. She wants a technical and fundamental view coming in for Hind Copper as well as Tata Steel for a year. She's saying that during the last metal cycle, she did not go ahead and book profits. So all of that money that she had accumulated went down the drain, and she does not want to repeat the same mistake this time again. So she wants to know, are these companies worth holding on to, or should she go ahead and exit out of these counters? What's your take firstly, Kush, coming in on Hind Copper as well as Tata Steel? What should Indu do so that she doesn't repeat the mistake of last time?
I think a good idea would be to hold both of these positions for the trailing stop loss. See, again, both of these stocks have done fantastically well over the last 6 to 12 months. And right now, again, what we are seeing is a mild negative bias, with some sort of consolidation. While both these stocks are slipping below, some of their, key average levels, I don't think there is a structural change just yet. But in case, to answer her query very specifically, in case you want to protect some of these gains, the best way to play this is to have a trailing stop loss. For Tata Steel, 160 is a good support zone, so that should act as her trailing stop loss. And as far as Hind Copper goes, I think there is a gap near the 364-65 levels. So perhaps just under that level, she should keep a trailing stop loss. In case that is triggered, book out, take some money home. We'll see, after some time whether these stocks are holding up or giving way. But hold, both of these with a trailing stop loss of the levels given.
All right.
And what's your take, Rajesh, coming in on this for Hind Copper as well as Tata Steel? What should Indu do? Because yes, it's metal cycle. You wouldn't know when it'll turn, isn't it?
Yeah, I agree that you never know when commodity cycle turns around. But at this point of time, they are on an upside. We have seen LME prices going up. There are good demand coming up after the data that came out from US and China, and these things are helping the middle pack as whole. Even for Hindustan Paper, they are going for capacity expansion with the EV and all. The demand is also going to go up. For a long-term horizon, yes, one can continue to hold. Tata Steel, again, the capex cycle is there. They're focusing on debt reduction. Their European operations are somehow being better in the recent past. So I think one should continue Tata Steel also. In both the stock, we think that in the next 1 year or so, at least 10 to 15% upside from the current market price is quite possible. But if you have a trading sort of view, or if you want to protect your capital or not doing the same mistake which you have done in the past, I think Kush levels would be decent levels to watch out.
All right, moving on. And Rajesh, once again, a query for you. This one is on Tarsan Products. Jaydev Appa, who is a long-term investor, has bought 100 shares at a price of 550 rupees. And just after the listing, it was a decent listing for the company. But post the listing, the stock has been under pressure. And even Jaydev Appa is at a loss. What to do in this one? And for the long term, should he go ahead and continue holding this one, or maybe look out for better opportunities?
See, they are into medical devices. Company is going for an expansion. The listing was good because at that time IPO market was on uptake. But the margins are on the lower side, and I don't think the margins are going to improve in the near future. Although after the capex, some amount of revenue or bottom line might go up, but I think on valuation parameters still at a higher on the higher side. So it would be better to exit on every upticks.
Okay, this one is coming in from Mika, who's writing to us all the way from UAE, and she has Kalyan Jewelers. She wants to know if, she wants to buy Kalyan Jewelers. She wants to know if it's a good buy for a period of about 3 months. What price should she look to enter? Kush as well as Geo Finance for 3 months. What's a good buy price?
So, both these stocks, we've had a buy call, for a while now. Although, right now we'd perhaps be, reconsidering at least from a perspective of 3 months. Now we've seen both these stocks come off the highs, which is a good sign. But has the fall stopped? I am not entirely sure. So my suggestion would be to, wait for some time. To her specific query about, what would be a good buy price for Kalyan Jewelers, 375 to 380 is a good accumulation zone. Has been for the last couple of months. So I think that's the level that I'll watch for. 375 perhaps she should wait for. Also, as far as Geo Financial Services goes, the stock is now approaching the 3-month low level of 350. If that is taken out, then perhaps the stock could head to 335 also. So between 335 340 is perhaps a good zone. So keep these levels in mind. But don't go and buy immediately. Perhaps we'll need to see the market texture also. But from a risk reward standpoint, both these levels will perhaps make an interesting entry point, at least to start accumulating them. If not, go out and buy the entire quantity at one go.
All right, Kush, once again, a query for you. This one is coming from Carol, and she has purchased Amara Raja batteries from a price of 764 rupees. And what a one-way rally that we have seen in all these battery manufacturers, be it Exide or Amara Raja. And even Carol is at a very good profits. So in the short term, what should be the strategy, and would you advise to book out some profits here? Is the first query, and she also wants a target for L&T Finance as well.
So first up, kudos for the position, buying it at such a awesome price, and more importantly, holding on to this position. Now, my suggestion is to hold on to this one, not be in a hurry to book out, because even today, if you see, the stock's not really reacting in line with the market. I know it's flat to mildly negative, but on the whole, if you see in the grand scheme of things, the stock's holding up very well. So my suggestion is stay put with this one. You should have a trailing stop loss with this, and that level comes to 1070. That's where I would place my trailing stop loss. In case that level is taken out, you'd still be exiting in a profit. But if the stock does hold up, in such a market scenario as well above this level, then you're looking at a 1250 kind of a target as well. So Amara Raja, hold with a trailing stop loss of 1070. As far as L&T Finance goes, I think the pressure in this stock could continue for some time. Perhaps 155 is a level that I will look for as a support zone. If that is broken, then the stock could slip further.
This was coming from Yuvraj. He's writing to us from Chennai. Kim's Hospital is the stock, 50 shares at a price of 2,270 rupees per share. Rajesh, he's sitting at a loss, but now he wants to know whether he should add some more in his portfolio or look to book out of this particular counter. He has a long-term view on this one. What's your take?
Which stock you said?
Hospital.
Sorry?
Kim's.
Not getting you. The sound is cracking actually.
All right, just before I'll come back to the query, as you can see, we have the third phase of polling underway, and right now on your screens, you can see Gautam Adani, who is all set to go ahead and cast his vote, I believe, in the third phase of elections. So that's the visuals that you're getting live on your screen at this point in time. As you can see, you already had the Prime Minister as well as Amit Shah and family that already have gone ahead and casted their vote in the phase 3 of the elections. Remember that the voting is underway in phase 3, and you have about 11 states and union territories today that are going to polls. It's being held across 93 constituencies. On your screen, there you go, Gautam Adani.
सर बताइए लोकतंत्र के इस महापर्व में आपने वोटिंग किया, आप क्या मैसेज देना चाहते हैं?
नहीं, आज का ये लोकतंत्र का ये महापर्व दिवस है जो आपने बताया, और मैं सभी नागरिक को आह्वान करता हूं कि आज आपका जो ये मत है और वो बाहर आके देवे और फिर उसमें लोकशाही की जीत है।
अगले 5 साल में आपकी क्या ख्वाहिश है? क्या इंडिया कहां से कहां होना चाहिए सर?
नहीं, इंडिया तो आगे बढ़ ही रहा है और आगे बढ़ता भी रहेगा। Thank you.
Medical science.
All right, so that was Gautam Adani who was addressing the media. Remember that today you have the third phase of voting that is underway, 93 constituencies, 11 states and union territories. You already had the Prime Minister as well as Amit Shah who've casted their vote. Among them also you had very big other leaders also cast their vote in this phase 3. But coming back to queries then, and coming back to you, Rajesh, the question was on Kim's Hospital. If you can hear me now, our viewer is on a loss.
Yeah. See, the entire healthcare sector has been doing very well, be it games or others. And I think going forward with the kind of medical tourism we are witnessing, with the kind of insurance awareness going on, these organized players are going to do well. Even on valuation parameters, when you compare these second-run counters like games, I think they are on a comfortable footing. One can continue to go long. And on any dips to maybe around 1950 or 1900 odd levels, it's a good buy.
Right, 1950 is a good buy for Kim's. But moving on to the next query, and this one is from Kawal from Dubai. And Kush, he needs an advice on Godrej consumers. The FMCG pact is holding pretty well today, but on Godrej consumers, is this a good time to buy for the next 3 to 6 months, and any targets to look out for as well?
Well, Srishti, in fact, Godrej Consumer along with Colgate Palmolive and Tata Consumer, these were the only select names that we had on our buying list also, from the FMCG space. Today, the stock is reacting. I'm guessing it's, news, perhaps the numbers are out, yesterday or today. That's why the stock is reacting. My suggestion is to wait a bit for, any kind of fresh entry, let the move settle, because even today, if you see the stock at a high of 1346 and is now, seeing some sort of profit booking, let this play out. Perhaps tomorrow you could consider buying. If you get this anywhere close to the 1275, 1280 mark, your risk reward ratio from there on will be excellent. So perhaps wait for this profit booking round to settle. Close to the 1280 mark is perhaps a good entry point for Godrej Consumer. On the whole, we are still very bullish on the stock, and the recent high that it made could act as your target. So hold up, wait for the 1280 to perhaps even 1300 odd kind of levels to re-enter.
Yes, Kush, you're right. Godrej Consumer is also moving on back of news. The earnings came yesterday post-market as the management gave a commentary saying the rural market is picking up. They are expecting to grow from here on, and that's one of also the reasons why Godrej Consumer with the rest of the FMCG pack is gaining in trade. But you can't say that for the benchmark indices or for the broader markets right now, because 250 points off the day's highest point, that is where the Nifty is trading at this point in time. We've given up also 22,300 mark. We are sub 22,250 as well at the day's lowest point. That's the benchmark indices for you. Let's take a look at Nifty Bank, because the picture there was pretty bleak as well. You have Nifty Bank that's given up over 770 points from the day's highest point at this point in time, at the day's low for Nifty Bank as well. And mid-cap index as well is seeing a very sharp cut. Remember that they started falling first, 2%, over 2% off from the day's highest point for the mid-cap index, while for the small-cap index, the pain is much more sharper. It is seeing a downtick of about 2% as we speak, 377 points of the day's highest point. That is your small cap index from the day's highest point. So yes, the markets are not looking that great as of now if you look at it. And let's take a quick check on what the India VIX is doing, because remember the India VIX has been seeing a sharp steady rally over the past few trading sessions, and that's only accelerated once we've actually kick-started the the election season as well. 5% uptick coming in for India VIX, surpassed the 17 mark, remember, at a one-year high. That is India VIX for you. But let's continue taking the queries in, and this one is on JSW Energy. This one is for you, Rajesh. I'm taking this to you because it is a fairly recently listed counter, that is JSW Energy. We have Venkat Ramani, who has the counter at a price of around 629 rupees per share. From those levels, the stock has definitely seen a correction. Wants to know whether it makes sense to stay put with this one or average out for a period of about 18 months or so. JSW Energy, what a winner this one has been. If you look at the stock price over the last 6 months or even 1 year for the matter of fact, the last 1 month has been very wobbly for this one. What's your take coming on JSW Energy? Despite the fall, it's a long-term bet?
See, being wobbly and the fall is just because of the kind of run-up it has seen in the recent past. And some amount of consolidation is taking place, but with the kind of capacity it has, the long-term prospects look good. The numbers have been very good in the last quarter. I think the performance is going to be repeated, considering the fact the kind of power scenario which we are witnessing belongs to a good group. Continue to hold.
Continue to hold JSW Energy, but Kush, Swami Day, who's writing to us probably for the first time from Kolkata, wants a short-term view on IRCON. Her buy price is 262 rupees.
My suggestion here would be to exit. The stocks broken below some of the key levels, and today it's also broken below the 20-day moving average. If this is a short-term view that they've requested, I'm assuming this is obviously a trading bet, then it'll be a good idea perhaps to exit at the moment. We'll revisit when the stock hits perhaps close to 220, 225 levels, which are the support zones. But at the moment, the suggestion would be to exit.
All right, this one is coming in from our investor, our viewer. The viewer's name is Namita. And Namita is a long-term investor. And actually, before I continue taking a query, just a quick reminder for all of our viewers. Tomorrow is the second Wednesday of the month. So we will be having the women's special. So we will be addressing most of the queries coming in from all of our women investors. So just a quick programming note for all of our viewers. But let me take this query coming in from Namita. And she's holding ICICI Bank at a price of 388. Apart from that, she has Bank of Baroda as well at a price of 227. And not just these two counters, she has PNB, IDBI Bank as well as Union Bank in her portfolio. What's your take, Rajesh? Does it make sense to be so tilted towards the banking space in a portfolio? What should be a strategy right now when it comes to these counters?
Said it right. Although she has a whole lot of good banks in her portfolio, but still the entire portfolio has been tilted towards banking, and that's not the right strategy. Something going wrong, or the rate cuts happening sometimes late, that would be a real problem for that. So it's better to book some profit in some of the banks where she's sitting on a good profit. I think ICICI Bank should be a candidate for booking profit. Others one can continue to hold. Or else, what I would say is maybe one or two banks like PNB or ICICI Bank you can sell and switch to either Kotak or HDFC Bank.
That's the take on the banking names. But Rajesh, your view on Tata Technologies, we did see the numbers as well. And Raghavendra from Andhra Pradesh has 30 shares from a price of 1,245 rupees. What is the outlook of the company? And he's a long-term investor is what he's saying.
See, the numbers were pretty bad, I would say. It was below expectation, and that's the reason the stock has seen a cut. But going forward for a long-term investor, I think it's a very good stock to hold in one's long-term portfolio, catering to specifically auto industries, I would say, and with the kind of new launches, auto numbers month on month coming on an exciting note, I think long term looks very good. And if it falls to maybe 900 odd levels, 950, then it would be a good buy. But at this point of time, one can continue to hold for long term.
Right. This one is coming in from Weber from Noida. Once again, I'll take this one to you, Rajesh, because he's talking particularly about Indian Bank, especially after the earnings. The stock has seen a downtick, and he's mentioning the results were not bad coming in for Indian Bank. A short while ago, we also spoke to the management of Indian Bank. He has about 1,000 shares at a price of 490 rupees per share. What's your take? You believe Indian Bank is just bearing the brunt of what rest of the PSU counters are bearing right now, or is your take something else altogether on Indian Bank?
See, I think what has been said on the weekend by RBI draft regulation, that's taking a toll on not only the entire PSU banking space, but some of the larger power finance companies also. And that's a temporary phenomenon, as Mr. Jain was talking about sometime back, Indian Bank, that it's just a small portfolio that's going into this construction thing. And the other thing is, it's just a draft regulation which has to be seen in a longer term horizon. And even if it's implemented, that will take at least 3 years' time. For FY25, it's 2.5%. For FY26, it's 3.5%. And for FY27, it's 5%. So it's a long-term thing, and it's not a very huge thing. Market has taken an opportunity to just profit book on these stocks because the entire PSU banking space have run up quite a lot. I think these fall is giving an opportunity for a long-term investor to accumulate. So anybody holding can continue to hold.
That's the take on Indian Bank. Kush, what's your take on Titan? Because just after the earnings yesterday, we did see the stock was hammered. But Imtiaz from Kolkata wants to know: is this a good price point for Titan to enter right now? And could that be a trading bet, or he can start investing for the long term maybe?
Well, just to put a cliche out, don't catch a falling knife. I don't think the fall for this, stock is just about done. I think, there is some more pressure, that could come in. There was, a strong support zone at that 32.50, 32.60 zone. It's broken below that. And it could also be with the market, slipping lower. But my suggestion would be to wait and let the fall perhaps stem. Let the stock actually show you, a rebound and tell you that, the fall is perhaps, at least for the near term, done and dusted. So wait, I think, 31.50 is the next key level to watch for. And even on the daily or the weekly setup, if I look at the stock is not even hit the, oversold territories despite the sharp fall that we've seen in the last 2 to 3 sessions. So my suggestion, wait up. 31.50, 75 zone is perhaps a good zone to watch for. And as I said, let the stock fall and arrest the fall and show you that the near term dip is complete. And that's when you re-enter, not at the moment.
All right, so that's the take coming in on the stock. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and just a quick reminder for all of our viewers that yes, tomorrow is the second Wednesday of the month, which means that we will be having a women's special edition of Buy Now Sell Now, where we will be giving preference to all of the women investors out there who write to us and who want to get all of their stock queries resolved by our experts. So yes, do write to us tomorrow 11 a.m. and we will try and take as many queries as possible and answer all of your stock related queries, especially for all the women investors out there. But let's move on and let's start taking the queries that are, or rather continue taking queries that are already pouring in. This one's coming from Fred, and he wants wants to allocate some funds for a mid to long term investment. A couple of counters he's actually asked Rajesh. One is Sudarshan Chemicals, Arvind Fashion, Inox Wind, or Oriana Power. Out of these 4 counters, which one do you think is a good, safe mid to long term bet fundamentally for Fred?
See, there can't be anything safe, I would say, in equity. You have to take some amount of risk. But as far as out of these 4 counters, which you have suggested, I think Sudarshan Chemicals is a better bet out of these four. Go long in this. It has not been performing since quite a lot last 1 year or so just because of the chemical sector in a downturn. But I think the sector has bottomed out and it will start doing well. The company is doing very well. The numbers have been decent, I would say, if not good. And going forward, I think the performance would be better. You can go long on Sudarshan Chemical in the mid-cap space.
Right, can go long on Sudarshan Chemicals, but the next query that I have is on PFC, and Kush Namandera wants a 3 months view on PFC. He's already holding 100 shares, but his buy price is quite high at 480 rupees. What to do in this one, since the stock has been drifting lower on the back of the news flows?
Well, from a 3-month perspective, not a bad idea to hold. Have a stop loss at 395. There's every possibility that after this round of profit booking is done, the stock could move higher. Not sure if he'll be able to perhaps exit in a huge amount of profit, but perhaps somewhere close to his buying price. So hold with a stop loss of 395. There's a possibility that the stock could reach his buying price in the 3-month time frame.
It's come from Sambi Reddy, who's writing to us from Guntur, and he wants to know about HDFC Bank. He's stating he's a long-term investor, Rajesh. He's purchased the stock at a price of around 1,625 rupees per share. He's holding it for the last 1 year. He wants to know what should he do. He's saying his time period is 18 months. Now, I'm not sure that his total time frame was 18 months for holding on to this counter, or he can hold on to for more 18 months. But what's your take on HDFC Bank? His buy price is 1,625.
See, after the merger, it has become one of the 5 largest banks in the world, I would say, going to report around 80,000 odd crores of profit in the next year. People are concerned about just 10 BPS drop in NIMs and these things, but these are temporary things. Going forward, the numbers are going to be quite good. The subsidiaries are doing well. Valuations are on a very attractive level. If somebody's fund is allowing him, I would say add this stock for 18 months time horizon. Go long on this.
All right, but with this, viewers, let's start taking all your queries in the rapid fire session. And the first query is for you, Rajesh. This one is from Merlin, who's writing to us from the first time, where she is looking to invest 10,000 rupees for the long term, and she wants some of your best picks where she can go ahead and invest this money.
See, if you're looking for a time period of 3 to 5 years, I think that's a long term, in my view, at least that period. So you can go long on either Reliance or HDFC Bank, Larsen, ITC. These are 4 from the large cap. In the mid cap space, you can go long on Jio Financial or IRCTC.
All right, this one is coming in from Devendra, who's writing to us from Gujarat. 200 shares of BEL at an average price of 150 rupees per share. What's your take, Kush?
Continue to hold. Have a trailing stop loss at 215.
Okay, the next query that I have, Rajesh, is from Pratish. Though SRF is down after the news flow on the US gas price, refrigeration gas prices, and the results are also due. His buy price is 2,615 rupees. What to do in this one?
Hold.
Okay, this one's from Sali Devi from Kerala. Wants to know about Shriram Properties. Not mentioned exactly what, but I believe she wants to invest in this one. So, Rajesh, your take.
Avoid.
Kush, Lakshmi has bought 5 shares of LTI Mindtree. Buy price is 5,200 rupees. Hold or exit?
Sorry, what's the buy price you said?
5,200 rupees.
No, you can continue to hold. My stop loss here would be 45.50.
All right, this one is coming in from a viewer who's writing to us from Thane. It's from Mohan. He has Oil India, 5,000 shares of average price of 225 rupees per share. Rajesh, makes sense to switch out of this and park money in automotive axles, or stay put with?
Continue to hold. Target 750.
All right, Rajesh, your view on BPCL and HPCL after the bonus issue announcement. Is this a good time to enter at this point? This query is from Nagesh.
Of course, despite bonus issue, the numbers have been good. Intrinsic value is high. Continue to hold. Add.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Rajesh, as well as Kush, for joining us on the show, taking all of the viewer queries and actually answering them patiently. And with that, viewers, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But don't forget, tomorrow's Women's Special. And now, after this show, Markets at Noon will take the action forward.
If you like this video, then like, share and subscribe to ET Now.